Yo, what's good, traders? Hopefully you've all been having a great weekend. I'm going to be doing a little educational video on price discounting. Sorry if I don't sound as into the video. I just recorded it all and my mic was on mute, so I've got to redo it all over again. But I'll be breaking down what price discounting actually is, where you can find areas of discount, and how you can actually trade these high probability areas in order to catch some nice RR trades. So without further ado, let's get straight into the breakdown. The concept of discounting is quite simple. It's really looking at how price reacts to areas of supply and demand on macro structure. These levels can also be considered as macro order blocks depending on your terminology, but really what we're doing is we're focusing on how price reacts to these areas here. So I've got these areas of demand mapped out, and you can see that there is a high kind of wick profile on these candlesticks. That basically shows us that there's a high interest of participants entering the market around these areas, so basically an abundance of buy orders. What you will start to notice though is when you actually refine these areas, you start to see there is multiple wiki reactions inside this one candle, and those wiki reactions are what we'd actually call discount wicks. I just want to bring your attention to this most recent higher low in gold. I just want to box off this whole level as well. And if we was to actually start refining through our time frames, we can actually start pinpointing areas of discount inside gold. So I'm going to go onto the daily. You can see that there's multiple wicks already starting to appear. I'm going to remove this. If we actually start refining again, we go onto the 8 hour. I would say this is a one, but it's kind of an invalid. So what I'm going to do is I'm going to just do a daily / 8 hour order block level. So now we've dropped down to the 8 hour and we've actually just refined our kind of level. We've just drew out a nice little fib, and I just want to bring your attention to these candlesticks here. Now, these candlesticks are our discount wicks, and the reason they're discount wicks is because the way they enter into this order block and then they kind of wick away. Now, typically, if you had a respected level like this and there was only a tap in and then price moves away, people won't trust it as much as if there was multiple touches in and around this area. You can see here, if we was actually measure up by the fib, the areas of discount we actually have got within this block, price actually discounted nearly 80% of the order block. We had 3 taps, which 20%, 50%, and then 80%. So this really shows that there is a high probability chance of gold making a move around this area because there is a strong buyer presence in this case. So when we've actually seen these wicks, what we can do is we can start just dropping down the time frame again. We're kind of just then waiting for like a break of structure, a clause to show us that, all right, cool, this is the bottom. Are we now going to make a move? And you can see here, look, we kind of got a break of structure. Price started pushing up. It rested into prior resistance, now support, and then we kind of got the move up before accumulating a little bit more. So that is how you can actually go ahead and trade these. I'm actually now going to be talking about the most recent discount area that we actually got in gold. So you can see here, this is our little order block where you got the first tap in, which kind of filled like maybe like 25%. Then we got the second one that filled like 38%. And then the last one, we got a fill around about 50%. This is just price discounting. So discount 1, discount 2, discount 3. And each time you notice that there's an impulsive presence away. And that's how you can tell the difference between like just a test into an area or if it's a discount, because you will see that every time it actually comes into that area, price just starts to push lower, but it pushes lower and then impulsively wicks off, and it would do this a number of times before it's found a level where it's happy or where it's discounted enough to then make a move to the upside. When I started seeing this like third tap in, I saw it was around about 1830, what happened to be a key area of interest. So what I started to do was drop down to a smaller time frame to see if I can get any entries. I started to see that there was actually some bullish divergence, there was multiple wick rejections, bullish candlestick formations, we had the hammer, we had another kind of spinning top, what kind of just shows incision in the downtrend. News had just played out, but I still had a tight stop loss because I was still like wary if this level was going to hold or not. So I had like a $3 stop. I was quite comfortable taking the trade. This was on my evaluation, so I kind of just split our positions as well. If you can't see, I got entry around about 18.30, and then got my second position around about 18.31, and then I got my last position at 18.32.55. So 3 really nice positions, and in turn I think I made just under or just over 5%. I can't remember exactly, but that is how you can trade discount wicks in gold. That is all in this video. It's a kind of a short one, but I hope you enjoyed the breakdown. If you did, like, comment and subscribe, and I'll catch you in the next one. Peace.